Welcome to the Stock Play of the Day Overtime Edition. This week on Monday, we talked about a long call spread in the QQQs. That is the ETF that tracks the NASDAQ. We'll discuss, did we fumble or did we score? Hello, my name is Brian Overby. I am the Senior Options Analyst with Ally Invest. All right, on Monday, we looked at a momentum trade. It was a speculative trade in that we did a short-term long call spread in the QQQs. We talked about on the show that we had the Qs running to all-time highs, or the NASDAQ, the NDX, and we were hoping that that momentum would continue for the rest of the week. So let's jump in and let's look at the actual trade that we discussed. Here we have the Ally Invest option chains. On the left-hand side, we have the call options. Today, the Qs, the market's been very finicky today. It was down a little bit, now it's up. We see that the Qs right now are at 237. Approximately up almost $3 on the day. And if I scroll down to the Ally Invest option chain workbench, we see this was the trade that we had on. We looked at buying the June 19th expiration 238 strike call and selling the June 19th expiration 243 strike call. So our hope was by the end of the week, the stock would be up above 243. And we actually went out to the 19th. So we gave ourselves a little bit more time than just 1 week. So now let's go and look at the charts and talk a little bit about what happened. There's a lot to talk about here on the overtime edition of the Stock Play of the Day, mainly because whenever we do these trades, they're not meant to be recommendations. We're just trying to learn. So a lot of things happened that we can learn from in this trade. So the first chart that we have is the actual stock chart of the QQQs. It's a 5-day stock chart. I drew a segment on here that goes right across the middle of the screen in this instance, but basically that means on Monday at noon, this is approximately where the underlying stock was at. So it was right around 239 when we put the trade on. We bought a little bit in the money option. Remember, we bought the 238 and we sold an out of the money option of 243. The speculation, the total trade cost $2.50, which was your total risk for the trade. So now if we look at this, I actually was paying attention the next day when we put on this trade. Basically the market went up from that point on. And I took a screenshot the next day with the market at 243.85. Now, I just happened to be by my computer, noticed that the stock had went through our short strike to the upside, which is good on a long call spread. So if we look at that, it went to 243.85. That means that the QQQs at that point in time were up $2.28. It was just after 2 o'clock on Tuesday, the day after the show. And I bring this point up because I see the midpoint was trading for $3.37. Now, we can talk about trades all that we would like to, but one of the biggest things is that you have a plan. And what is your plan? And we discussed 2 different plans that we could. Basically, we set up our risk where we had a 50-50 reward. In other words, we paid $250 for it and we could make $250 for it. It was a 5-point wide spread. And we said, well, you could just let that run and come back at the expiration date and see where it's at. But also you want to pay attention to it in that if you could get out for close to the maximum, you definitely want to do that. And the maximum that it could trade for is $5. You paid $250 for it. You'd be making approximately $2.50. So what do you do if you wake up the next day and all of a sudden you see that position up $1? What would be your aspect of it? Now, do you stick to your plan? You still have a long way to the expiration date. And I'd already mentioned one of the hardest things about a long call spread is that you're selling an option that wants the market to go down, and you're buying an option that wants the market to go up. So on our trade on Monday, the midpoint of the trade was around $2.45. That meant $245 for each 1-by-1 spread that you did. And now we see on Tuesday at 2 o'clock, it's trading for $3.35. So you're almost up $1. So my question is, do you sell and get out? Or do you stay the course and see if the momentum continues. One of the biggest things that happened is that we did break through an all-time high, and basically what we talked about on the chart, which I'm going to show you here in just a little bit, happened. So in my opinion, if I was looking at this trade, I probably would have stayed the course. Why? Because that was the plan. That's what we were looking at. Now, how many people can do that overall is a bigger question. But the plan was that we were going to try to get more on the upside. And then maybe if it was reverse and the market went down that dollar, we would think about getting out on the downside. But you had to determine that risk and what your plan was. And the biggest thing about a plan is you have to stick to it and you have to be consistent with it when you're doing your trading. So here's exactly what happened. Here's the chart. And I find this odd in that I did not adjust this chart from the Monday show, and that this channel was drawn, this support was drawn overall, but the chart continues on until the current days because it's a 5-day trade. So what did we see happen? Well, we talked about breaking out to the upside here, and then that trend continued until it didn't, which was basically yesterday, which was Thursday of this week. The market came down, and it actually, you see, right when it broke through the trend line, it actually dropped down hard to the end of the day. Now, today we got kind of mixed markets, but another thing to point out, too, is that we've talked a lot about how the technicals during this pandemic and during this very volatile marketplace have played a pretty big role. And we see that we came all the way down and just touched that 20-day moving average, and that seemed to add a little bit of support to the QQQs, or you could say the NASDAQ index overall. The NASDAQ looks very similar chart to the QQQs. All right, so now what happened over that week? Well, when the market got all the way up to 247, you should have been fairly close to your maximum, and you should have been thinking about getting out of your trade. I don't necessarily need to make the $5 overall. If I have 2 weeks remaining in this trade and I see that it's trading at $4.50, $4.75, there's no way that I'm going to stay in the marketplace just to make at $4.75 an extra quarter and still have all the risk of the trade on. So if this happened early, I would definitely look to get out if I'm in the market, and this was on the close on the 10th. Now, we did have the big down day, and if anything, that should have definitely shook you out, because then we had the market bounce back up, and it's still above our short strike. So if you were thinking, oh, this market's just going to continue, and all of a sudden you have the shock in the marketplace, well, now if you haven't gone out, you definitely deserve the stupid award for that. All right. So if you fell asleep, you put the trade on Monday on paper, and when we have paper trades, we don't follow them as much as real money. I agree with that. And all of a sudden, you wake up today and the market's down around 237. I want to quote this because something else really happened. And we mentioned this a little bit on all the stock play of the days. We finally had the VIX index, the volatility index, the fear index, if you will, come back down below 30. All right, so that's where the VIX was at. The VIX was right around 25, if I recall, on Monday when we did that trade. All right, well, these big drops really scared investors overall. They kind of got blindsided on it. And it's almost like they were in a dream, dreaming about the markets going up, and then all of a sudden, wham, what just happened? And because of that, people were running to the option marketplace, and this is where options really work as protection, okay? So I'm going to actually show you, before we go and look at the trade and the price right now, I'm going to show you what happened to volatility in the VXN. Okay, the VXN is the NASDAQ volatility. It's calculated very similar to the VIX in the S&P 500 index. All right, so now if you scroll down, you see this is where we were at. Once again, I drew a segment for Monday at noon when we're putting this trade on. And the VXN was down around 26 at that point in time. Now, look at what happened to the volatility over the life of this. We did have the Fed speak, but volatility just slowly increased. Even when in the up markets, we saw implied volatilities increase. And that's a lot of times a sign. When you're getting an up market and you're getting increased volatility, that means the fear factor is coming in. And then you price that in with a little bit of people being a little bit overbought, and we see what happened. But so if you put the trade on Monday on paper, you came to Brian's stock play of the day overtime, and you just said, well, I'll look at it on Friday. Well, guess what? You're still okay on the trade. Why? Because implied volatility helped us even though the VIX index, or I'm sorry, even though the NASDAQ, the QQQ came down and now is below our strike prices on our long call spread. So to summarize real quick, like before I get too long in the tooth here, we put this trade on for $2.40. The market right now at this moment, we're taping live on Stock Play of the Day Overtime. It's 237. It's 2 points below where we actually put the trade on. But we're only down about, I'm going to call it 27 cents on this entire trade. So what would I do right now? Well, I would take advantage of that high implied volatility. If I was down on this trade and I got the weekend coming and I have a lot of time decay and I fell asleep, I'd be like, all right, I got lucky per se that the implied volatility increased as much. And if I'm wrong on my forecast, I want vols to go up to help me with my long option contract to raise that valuation. So because of that, this trade is only down about 27 cents. I would close that trade and move on to the next one. All right, that's it for this edition of the Stock Play of the Day Overtime. We're going to be back on Monday for the actual Stock Play of the Day. Please click subscribe and ring the bell so you get all the alerts. Thanks for coming.